Skyworks Solution versus Broadcom. Which one is a better buy at current prices? Hey guys, welcome back to another video here at FiscalVoyage. My name is Felix, and today's video we're gonna first talk about Skyworks Solution stock as well as Broadcom stock. And I actually made a video for both companies early in May, and make sure to check out those videos. And we're gonna go over in this video those videos as well, and you can see the price point of those videos as well as my recommendation at that time period. But first, before we get started, if you're new to the channel, make sure to hit that subscribe button as well as like this video to help with the YouTube algorithm, and check out my free ebook in the description below, 5 quick metrics to look for before spending more time in investing time into any particular stocks. So over here, as you can see here, on May 7th, 2020, I did a Skyworks Solution stock analysis. On that day, the price was $106.97. It was actually, based on these estimates, slightly overvalued by 3%. Even though it was overvalued, I saw, of course, with the revenue growth, net income growth, everything looks good. I gave it a buy recommendation at that time period. So if we look at the chart since that, on May 7th, you can see here that currently it is up 27% since that video was created. So now let's look at Broadcom and compare the same thing. Broadcom, you see here, I made the video in May 5th, so it was 2 days before the Skyworks video. And Broadcom, that day price was $267 and a fair value of $327 based on the estimates, and that means it was undervalued by 22.4%. And I gave it a buy recommendation. And if we look at Broadcom, on May 7th, here is when I released the video, it's been up 33%, 34% since that time frame. It's down today at 2%. But I wanted to do a comparison of the two in this video to talk about which one is a better buy in today's market. So let's look at the fast graph for Skyworks Solution stock. As you can see here, the black line is the monthly closing price, the orange is a earnings with a multiple of 15, and the blue represents a multiple of 16.9 or 17. As you can see here, the stock follows earnings. When earnings was picking up here in 2014 and 2015, it jumped 47%, 63%. The price of the stock jumped tremendously. But then, for whatever reason, it dropped, I guess because of the slowdown in earnings growth to 6%. It dropped there very hard there in basically in a year. But then it picked up as earnings picked up as well. And then in the past few years, earnings dropped 15% and 6%, where analysts are estimating a 6% drop in earnings. So this may drive the stock price lower once the earnings report comes out maybe next month. But you can see here it is overvalued based on the historic data. If we shorten this time period to get a more reasonable earnings growth, you can see here, for 2021, analysts are expecting $6.90, a 20% increase in earnings, but it's much higher PE ratio versus the normal PE ratio of about 14. So that's an indicator that it may be overvalued at current prices just by fast graph. If you want to go more in detail, check out my video on Skyworks when I presented the full stock analysis on Skyworks. But you can see here, based on fast graph, it does look to be overvalued based on the current price. And overall, the company is a very solid company. If we look at free cash flow, the dividend, the free cash flow covers the dividend very nicely. As you can see here, free cash flow estimated to be at $5.87 for the year versus a $1.82 dividend. So you have a nice payout ratio of 31% based from free cash flow to the dividend payout. It does pay out a low yield of 1.45, but the dividend is very safe, and they've been growing it very nicely. If we look at the performance here, they've been, in 2015 they grew at almost 200%, and then 2016 63% dividend increase. That's amazing. Almost 9.5% or 9.4% there. Double-digit dividend growth for the past 2 years. So there's no reason why they wouldn't grow it in double digit this year as well, because of the free cash flow covers the dividend very, very nicely, and analysts are expecting 30% free cash flow growth for 2021 and 18% in 2022. So overall, the company is doing great. Free cash flow is good. Adjusted earnings looking good as well. Future projections. The only problem I have right now is with the price of the company and this current valuation. So this is why I think Skyworks Solution right now is a hold based on my recommendation and what I'm seeing. Now let's look at Broadcom. Broadcom, kind of same story. Great business. Earnings was pretty flat from 2012, 2013. At 3%, 4% growth, but then it jumped tremendously at 2014 at 70%, 2015, 83% earnings growth, 28% in 2016 earnings growth. So that years is tremendous earnings growth, and you can see the price was following that growth as well. But it was short in this time period because this earnings growth rate is based on all this huge growth, but the company is slowing down. If we look at the past 5 years or 3 or 4 years earnings growth, you can see it drop down to 10.8% earnings growth. That's still very good earnings growth. Not as the earnings growth we saw, the 30%, I think it was it 38%? But it's still a nice 10.8% earnings growth. Even if we shorten this and remove that, it drops to 6.4% earnings growth. And you can see here it is expected to pick up in 2021 by 15% and 6% in 2022. Again, this is the monthly closing price. These green dots are the time when I bought shares of this company. You can see here I bought 6 shares in March 13 at a PE of 10.4, and I bought 4 shares here during the down market in early March, February, March, and April. And then I also bought shares back here in 2018, and I've held it since then, and then I saw the market crashing and I bought more shares. But right now the company does look overvalued based on the PE average of 12. So this might be also another indicator. Again, check out my last video of Broadcom here, which was posted on May 5th. It goes more in detail with earnings growth and things of that nature. But of course, the price changed since that video, obviously. But I think right now, Broadcom looks to be fairly valued to slightly overvalued. Now, would it be a bad decision to buy it right now? I wouldn't say a bad decision. I wouldn't go all in right now. But I think out of the two, Skyworks Solution stock and Broadcom stock, I think Broadcom is a better buy, quote unquote buy, at current prices. And it does have a nice better yield at 3.55%. And if we look, let's extend this further, and you can see Broadcom was growing the dividend as well very nicely from 2016, 25% growth, and then 2017, 110% dividend growth, which is outstanding. 2018, 71%, 2019, 51%. So I'm very excited to the next dividend increase for this company. Free cash flow also covers the dividend very nicely. I don't expect a 20% dividend growth, maybe something in the 15 to 10%, considering the economic shutdown and all these things that's going on in 2020. So a nice conservative 10% dividend increase would be very nice here. But as you can see here, free cash flow covers the dividend very nicely at expected estimated $23.99 in free cash flow for 2020. That gives a payout ratio of only 54%. So they have plenty of room to continue growing the dividends at a nice 10-15% rate going forward. The company is a BBB minus investment grade, so that's positive there. The debt is pretty high at 64%, but overall, out of the two companies, Skyworks and Broadcom, I think Broadcom makes a better buy now. But I'm personally not buying. I think there'd probably be a better opportunity some other time. I would like to see a PE around, let's see here, a PE around maybe, let's give it time here, a PE around maybe 14 or 13, and then it'll be a good buying opportunity. But for now, I think, if you wanted to open a position in Broadcom, maybe a 0.5% of your portfolio right now, but it's not a strong buying like it was before. Just to take note of that. All right, so those are my opinion currently at Skyworks Solution as well as Broadcom. I think Broadcom is slightly better buy currently. It might be even a hold. I would like to see, like I said, the price PE around 14 to 13. But Skyworks is, in my opinion, overvalued right now. I'll just continue holding. If you bought shares when I made that video, just continue holding the shares. For example, I don't own Skyworks, I own Broadcom, and I'm going to still hold shares of Broadcom and just collect the dividends. But if Broadcom does come much down to the PE of 13 or even lower, I'm definitely going to be buying more shares. But right now, I'm personally holding Broadcom. I'm not buying Broadcom, but if someone that's interested in buying Broadcom, definitely keep it in your watch list and maybe buy a few shares at current price. Because me personally, when I own a company, I follow it much better than if I had it just in my watch list. So when I want to do that, I'll buy just one share of a company and just keep an eye on it. Even valuation is high or low or whatnot, just buying one share of a company, for me, for some reason, it helps me follow it much better. So there, those were my thoughts on Skyworks Solution versus Broadcom. So I hope you enjoyed this video. Again, if you're new to the channel, make sure to hit that subscribe button, like this video, and check out my free ebook in the description below. And I'll see you guys in the next one.